you along.
I think we have Jean to start us off.
I'm happy to, if you would like. Was that my cue?
And I think so.
Okay, great. Thank you. Good morning, everyone. I'm so pleased to be here. I'm sorry I missed the last couple of sessions, but I've heard how wonderful they were, and continuously enjoying how much information is being shared at each of these sessions. Perhaps sometimes we're trying to squeeze so much and too much into each session. But we're hopeful that there will be some follow-up for the group and as well as individually. So thank you again and welcome to our Nonprofit Management Institute. We appreciate especially the partnership with Guilford Nonprofit Consortium and the Triangle Community Foundation, if Tanaya is on the call, recognizing her, and Steve Hayes. And especially thanks to our team, Lisa, Leslie, and Rebecca, for putting all of this together, for our guest CFO person today, Tracy Carriette. She'll be joining us at some point. And of course, always thank you, Dr. Pamela Palmer, for leading us through what is very important and difficult information. And then to all of you, congratulations for continuously trying to improve your work and the work that you do in this in your communities. So with that, I will pass it back to you, Lisa, and or Dr. Palmer.
Thank you, Jean. Appreciate that. So just as we've done, I feel like, we're a little we're like distant cousins at this point. I know we're all anxious to get through. We have 2 more sessions to go through and we'll be done. So we have another jam-packed day for you as well. So hopefully your minds are clear and got their thinking caps on. I want to do a quick introduction just one more time of our programs team for you. Again, I'm Lisa Carlson. I'm the Chief Learning Officer here at the center. We have Rebecca Beck, who's our Education Manager, and Leslie Morales. And then as our guest, who's also a part of our center, Tracy Carriette, who will be joining us today for parts of the financial management presentation. Again, we'll all be monitoring the chat. And I just want to reiterate again, if you are not a member and you're interested in, I'm trying to, our PowerPoint needs to catch up to me here. Are we, how are we doing, guys? If
one of the slides is like not working today, so I'm just gonna stay on this one.
Okay, so can we get to the website link? No, that won't work either.
Or Rebecca.
I can share my screen. Yep. Let me do that.
Virtual world technology. Thank you for being patient with us.
Always exciting, right? All right.
Even those who do this all the time have a problem. Thank you. So I just wanted to give you a quick, very quick, we did this earlier on in some of the earlier sessions, showing you our website. And if you're interested in joining a member, to becoming a member, this is where you would go. We have under membership and it says become a member. And the directions are pretty clear there on how you can to join online. You click the button on joining. Again, the benefits are extensive in terms of member benefits, discounts to webinars, pro bono assistance, especially in some of those areas that we have talked about excessively when it comes to board governance and some of those other details. We have some great volunteers working in our pro bono department to help assist. So with that being said, I'm going to go through our agenda so we can get started. I'll wait till everybody catches up really quick. As you know, today is session 5. And today's topic is fundraising and financial management or financial management and fundraising. As we have done in the past, breaks will be built in with our breakouts. So so don't worry, we'll make sure that happens. And as always, we'll get started with a review and reflection of session 3, strategic planning, which was a pretty big one as well, that Dr. Palmer will take us through. And if there aren't any questions, I think we'll get started. And as always, drum roll, Dr. Palmer.
Good morning, everyone, and we're so glad you're with us. And we are going to do a little bit of a recap from last week. Our topic was strategic planning. Rebecca, I don't know, do you have any housekeeping items that you wanted to share at this time?
Thanks. I don't think so at this time. We will, at the end, I'll have more to share because graduation is coming up, our last session. So I'll have more then, but thank you for checking.
Sure. And so in terms of just a reflection, you should have received resource materials in the wraparound. So you would have received information that we shared. And as you've noticed throughout our sessions, whenever we're facilitating and in real time working in our work sessions each week, there is information, supporting information that we provide to you. And when we do that, we send it out in the wraparound. So I just want to kind of remind folks that typically you will have all the information that we're referring to either in your manual in terms of where the materials are, in the wraparound, or if there's going to be something different or something added, we typically, that was in the previous session, we typically include that. So always check your email, always check those links, because oftentimes that's where that information is. So what we wanted to do in our recap today is to revisit the SWOT analysis. And that worksheet is on page 95. So if we could go to that page. What we did in terms of orienting you to the fundamentals of strategic planning is we highlighted what is typically, again, fundamental to what happens in the strategic planning process. So we walked you through all of those different steps. One of those steps is the SWOT analysis. And with the SWOT analysis, we provided you with a couple of worksheets. And one of those worksheets was a four kind of divided in 4 squares page. And what you were to do here is for every goal that you have, you would identify what the strengths, weaknesses, opportunities, and threats are. And then the next page, which is page 96, we actually provided some examples for you. To kind of help you think about what some of those examples of strengths, weaknesses, opportunities, and threats are. And so I wanted to circle back around to this. I mentioned last week, this is the heart of any strategic plan, what those goals are, and which is the what, how we're going to implement those goals, which is the action steps, and then why, which is the outcome. And so if we could go back to page 94, I believe, where we provided the worksheet in terms of writing out the goals. One more, I think maybe one more. Got my phone. Well, maybe it's 2 more. There it is, right there. All right, so here's that worksheet where we worked on a goal, action steps, and outcome. And then what we asked, it was for you to do a SWOT with that particular, with a goal. And so now we can proceed back to the worksheet. And then for each of the goals, so if your nonprofit had 10 goals that you identified that you wanted to include in your plan, you would do a SWOT for each goal. And then in that next sheet, as I said before, was the example of examples of the different pieces of the SWOT analysis or the different parts of the SWOT analysis. So if we could go back to gallery, and I just wanted to take a minute to see If there are any questions, I know that was a week ago and a lot has happened since last Tuesday. But I just wanted to recap right here in this space. So you can either put your comments in the chat, you can unmute yourself in terms of just kind of where you're sitting, what give me an idea of where we are with the SWOT analysis. So then, hearing none, I'm thinking that we're good. You can head nod, or you can give me a reaction of a thumbs up, or and okay. Thanks, Kathy. I see that. Thanks a lot. All right. So another part of our recap is we provided you in the wraparound 2 examples of that worksheet completed. So if I could show the nonprofit goal first. So we gave you an example of that worksheet completed for a nonprofit goal, but also for a program goal. Again, you would have received that in that information. So we gave you some actual examples of that. So here is the sample for the nonprofit. So this is the specific goal statement that we used. And if we could scroll up just a little bit. And here is the action step that we use, the action steps, I'm sorry, that we incorporated. And then here's the outcome statement, right? And then for a program, we use the sample program goal, and then action steps, and then the outcome statement. So we wanted to provide you with the worksheet completed. Think about it also in this manner. We can definitely write goals and action steps and outcomes for the nonprofit from a macro perspective, but we can also write specific goals and action steps and outcome statements for our programs as well. Remember, we learned about program design, development, and evaluation. This sample goal here would be appropriate when if you were going to craft that one characteristic in designing your program. You would, and managing your programs, you would include that in there. So 2 examples that you can use. And I see some comments in the chat. So Rebecca, I'm going to let you share those with us.
Sure. One of them I really liked, Jerry mentioned that their team worked through a SWOT analysis when learning the skills and giftings of our team. So actually looking at our team, what do we have to bring to the table? What's missing? What are we missing? What do we need to think about going forward? That's great. Seems intuitive. It's a good tool, and it has a variety of uses.
Okay. All right. Any other comments before we move into our new information? Okay, if we could go back to the gallery view. So we are going to do introductions in breakouts this morning. But before we go into that, I know it's football season. And if I've asked this question already, I just want to know the answer again. So who is your favorite NFL team? So I'm in a household where I have 11th grader who has played football since he was 6 or 7 years old. So it's a thing in our house. And my husband played football in high school, college, and all that stuff too. So any folks paying attention to Monday night football or Sunday night football? Carolina Panthers. Okay, I see the Ravens. Oh, they almost lost last night, didn't they? That was pretty close. Am I missing any, Rebecca? I'm trying to keep up. I just can't keep up. This
Lots
is a
of Panthers,
football. This is a
Packers,
football group.
Vikings.
Panthers, Wolfpack, Panthers, Vikings, Tampa
Okay.
Bay, Steelers.
Mhm.
Wow. Okay. So,
I'm in North Carolina, but a New England gal at heart. So Patriots all
okay.
day.
All right. Well, again, good morning. And thank you for that little bit of information about who your teams are that you're rooting for. We'll see who makes it to the Super Bowl, right? So at any rate, so our topic today, or two topics, is financial management and fundraising. Financial management and fundraising. And we do it in that order for a reason. We start with the financial management, and then we move into talking about strategies around fundraising, because we know that if we're going to engage in fundraising, then we need an internal apparatus administratively that where we're managing our finances, and that we have some overarching strategy that we're trying to engage in so that we can meet our financial obligations. And so because of that, we have our team member, Tracy is with us today. And so in a few minutes, she'll be joining in with us to kind of help us to really understand from a practice standpoint, what some of these pieces of information, what it really means on the ground. And then she will also be open to questions that you may have. And so we'll be working together to bring that information to you. So to get us started and to really get us thinking about one of the primary focal points of finances with nonprofits and fundraising, this idea of diversifying our revenue. So diversifying where our dollars come from. So we're going to go in breakouts and have you either introduce yourselves for the first time or reconnect if you've been in a breakout with your peers in a prior breakout session over the weeks. We're either introducing or reintroducing or just saying hello and, just kind of getting settled in for our topic. And so we're going to share an image with you. And when you go in your breakouts, after you've done a real short, quick intro, we want you to have a discussion about what this image means as you look at it, okay? So we're gonna share that image and then we're gonna go in breakouts and you're going to discuss what you see in this image, or how does this image represent a nonprofit with a diversified revenue stream? So I'm going to repeat that question. How does this image represent a nonprofit with a diversified revenue stream? Okay, so that's the question that you're going to be answering, and that's the essence of what you're going to be discussing. So I think I can pass this on to Rebecca at this point to move us into breakouts. No, can we go ahead and show the image? Yeah.
Sure. Yeah, I'm going to go ahead and Leslie's going to show it on her screen.
Okay.
And I'm going to pop the link in the chat so you can pull it up. It's a PDF.
Perfect. Okay. So this is the image of a nonprofit. It's the YWCA of High Point. This is their annual report. And this is what their finances look like in terms of where their revenue is coming from, right? I think it's 2018, I think is the year. So we just kind of pulled this is public information. It's on their website. And the question is, how does this image represent a nonprofit with a diversified revenue stream? How does this image represent a nonprofit with a diversified revenue stream? And this is in the chat. The question is in the chat. And we're also going to put this image in a PDF, right, link, so that you can access it
Exactly,
as well.
Yep. So the PDF link is there in the main chat. I'm going to go ahead and open up the rooms momentarily, and I'll pop this question that we're all asking you to talk about in your breakout rooms into the breakout room chat, so you have it in front of you. And
And
we'll be
this will be-
back. Go ahead.
15 minutes. Oh, sorry.
No, that's fine. We'll gather back here in 15. We'll give you a little warning when we're about to close the rooms. All right, everyone. All right, we'll see you back here in 15. Welcome back. I'm going to turn it over to you, Dr. Palmer.
Wow. Welcome back to our main room, and want to just kind of get your take on what the image represented in terms of thinking about diversifying where our dollars come from in terms of working with a nonprofit and managing the finances of a nonprofit. So how many breakouts did we have, Rebecca? Just the
We had 6.
So we had 6 breakouts. So if I could just kind of hear from maybe half of us. And then also, if you want to put individual comments in the chat, that would be very helpful as well. What did you think about that image?
I'll jump in. I was in group 1, I think. Yes. I think 1, at first glance, it appears to be very diversified. There's lots of different slices in the pie. I think several people had concerns about so much of the funding coming from the United Way or a single source. So that was one thing. We also kind of, I guess, maybe veered off a little bit. We talked about within our own organizations, how much of our income is earned income, and how, if that is or is not even a possibility based on the services that we provide. And for several organizations in my group, there is essentially no or very little earned income, because the services that are provided, in order to continue for the community to access them, they cannot have a fee associated with them. So that obviously reduces your potential for earned income. So I think that's a nutshell, but if anybody else in my group wanted to add something, by all means.
I'm from group 3, and we agree with what she was saying, that we took a look at this image, and we felt it was diversified, but there was too much coming from 2 different sources, mainly United Way. And we felt like there was an opportunity to develop other areas within this, or to go out and look at maybe getting grants or something like that to help sustain this long term. Also, what we talked a lot about in our group was the difference in lifespans of the nonprofit. Like, certain nonprofits are 20 years old, and they do have private pay coming in, and it's just different the way that they're set up, with the other nonprofits that are new or newer and don't have private pay come in. How do you develop a business plan for them? It's just different than what we're doing. So they're learning from us on how to develop business plans and who to go after to make them more sustainable. So it was good discussion, very just good discussion.
Okay, so that was 2 of our groups. And we have one additional group.
Hey guys, and I'm sorry, I don't remember what group number I was in.
That's okay.
But we kind of discussed in a similar light that as it's kind of presented and how they would classify their revenue streams, it looked pretty diversified. But Wayne brought up a good point. We did highlight that over 50% of the revenue is coming from 2 sources, which can be relatively problematic. We also highlighted, and we're kind of surprised that membership only accounted for 1% of the revenue. And we discussed, we would like to have seen maybe kind of a differentiation between what is reoccurring monthly revenue and what is just kind of like a one-time annual kind of gift. And we also really started to give our own examples of I think identifying unique sources of revenue, where most of our programs were free to our clients in our community. So it wasn't necessarily earned income, as Jessica was mentioning before, but could we identify unique ways to make earned income that in and of itself maybe didn't necessarily contribute 50% of the revenue, but collectively over time it could make a pretty big difference.
Did you all talk about any specific examples, Chance?
For earned income?
Mm-hmm.
So a couple of examples brought about were, tagging in like a t-shirt or, an event of some kind. And I think that is really kind of reliant on, I think, your brand awareness within your community on the incentive for purchasing that. But that led to a conversation of, I think, identifying the lifetime value of an individual donor and perhaps coming up with a strategy for events and publicity that isn't necessarily tied to a revenue goal, but tied to a new donor goal. So the example would be sponsoring a sporting event, for example, not necessarily with the hopes of breaking even on that cost, but for attracting a new donor because that donor's worth to you over their lifetime is greater than the initial cost for that.
What I think is important about what you've described is that you did a little bit of shifting in your talking about this image from just grants and earned revenue to fundraising, and that's the connection that we all need to make. When you look at this image, you see individual giving is at what, 16%, right? So there's definitely plenty of room in this particular image to do, a little bit more work on the fundraising side and the donor giving side of this image. And so the other thing I would say, and we're going to revisit this again when we start talking about fundraising at the bottom half of our time today. But you're right, for those of you who, at a glance, when you look at this, you have 8 revenue streams, when you look at this at a glance. But then when you dig a little deeper, we'll learn that there's quite a bit of grant dollars in this picture. There's several of these streams that it's a grant, and so that's very, in some cases, could be a little bit temporary rather. And so we want to really think about what the portfolio looks like. The other thing is though there is some evidence here of this way of thinking about diversifying where your dollars are coming from. So I don't think we'll find a perfect picture of this, or at least I haven't in all these years. I haven't found a perfect picture that kind of shows that, but the theory is to not have more than 1/3 of your revenue come from one source. So if we're aligning this image with that theory, they're not doing too bad, in terms of that. And at a glance, someone gets it. There's someone that's connected to this organization that gets this idea that, let's just say if United Way did fall off, it's 27% of where the dollars are coming from. They might survive. They just might, because they have other ways of bringing dollars into the organization. And we know, depending upon the grant, how directly aligned those dollars are with a promise that we've made to perform certain programs and provide particular services. So again, perfection, I don't think I've seen an image, in terms of looking at a portfolio that I would call perfect. And I'm not sure what your portfolios look like with your individual nonprofits, but I haven't seen one yet. But this isn't bad. This is fairly, someone is getting the concept and they're getting the idea. So Any other comments about this image? And I don't know, Tracy, if you have a comment or two to make in general, but if there's anybody that has a comment.
I was
Yeah,
just
Go ahead,
sorry
Joy.
about that. I was just thinking that based on what you just said, that these pie charts that we create are kind of like personalities, you know. And I think for a younger nonprofit, it can be a bit intimidating to show your pie in your finance. You know, when we do our annual reports, you know, it's kind of like, you know, I'm come from a musician stand. It's kind of like standing on the stage with the microphone and it's just you, and you're gonna, you know, and you're putting your voice out there wherever it is in the moment, you know. And so, you know, I think that's why it always feels intimidating to put your pie chart because that, you know, it kind of fluctuates and it changes, but it can tell you a lot about where the nonprofit is at the moment, you know, and how it's moving and flowing. So it's kind of a reflection of, you know, the state that things are in. But when people are viewing it that way, you know, you look at that pie, that one's pretty healthy, you know, that feels intimidating, you know, as a, you know, it's funny because we're not a new nonprofit. And like some people connote a smaller nonprofit with somehow a newer or less experienced, you know, nonprofit, but we've been around for more than a decade now. So, you know, we're not green as the grass, but we're still having issues with showing that, getting that diversified, you know, sources of income to, you know, to get us to that sustainable level. So, but it's like a personality. It's like some people may have that third maybe coming from programming. Other people may have that third coming from funders and sources and things. So you can see a lot about, you know, how the nonprofit is moving and growing based on that picture. And the thing that I saw in that picture when I looked at it, and I was, oh, okay, when you told us who it was, you know, that kind of helped was, wow, look at all those different revenue streams that they've developed and they're getting sources of income from. That was impressive to me. And the fact that, you know, they had a third in programming was impressive to me, even though those two pies look very big. Oh, that might not be too good. But for me, I was like, wow, that's pretty dope. Interesting that, you know.
Yeah.
So I was thinking about them as personalities, these pie charts, nonprofit personalities.
And it's about growth and development, you know, it's about, you know, continuing to work to get to that dynamic. Tracy, you were going to say?
Yeah, I was just going to say, and it kind of ties into what Joy was leading to and what some others are typing in the chat about recognizing COVID, and these financials may not be from that, but recognizing the fact that something like a pandemic can really change the way these pie charts look. So another way you can look at this, or taking it a step further to sort of think through, is what would we do if we did lose one of those larger sources of income? So start thinking a little bit about kind of contingency planning, like where would maybe that force us to think differently about some of these other program areas? Or to your point, Dr. Palmer, how would we survive if we lost some of that? And so I was just thinking about how you could kind of take it a step forward and try to do some forward thinking, which I know can be challenging sometimes because so often we're trying to make sure that we're making it in the day-to-day. But it is really important to make time to think about future planning, contingency planning, developing maybe what the center calls an operating contingency fund, which is like savings for when you have challenges like a pandemic or you lose a large source of funding to help you get through those challenging times. Because as nonprofits, we all have them. It's almost cyclical. So that was sort of what I was thinking about as I was hearing you guys share your feedback.
Thank you. Thank you, Tracy. And you know, again, you know, the work that we're doing in this institute is to really help us to understand what we consider to be the fundamentals. You know, we are sharing some practices, and we're offering up some suggestions for you to begin to think about as you're managing your nonprofit. And we know that the journey is different for each organization for a lot of different reasons. And just because our nonprofit might be 100 years old doesn't necessarily mean that we have been able to land as it relates to this image, that we've been able to land in a place where we can go, oh, to Tracy's point, we have some contingencies. Some of us are just trying to make it each and every day and can't even begin to think about not yet, to begin to think about forecasting for the future or having a reserve so I don't want us to look at this necessarily in the context of giving ourselves a grade. I want us to look at this in the context of this is good to know. This is good. This is a good aspiration to have. And then the question then becomes, how do we get there? And there's, various experiences, trainings, et cetera, that you can engage in to get more of that how. We're going to talk a little bit about some of the how today, and Tracy's going to help us do that. But it's important to recognize that, to Joy's point, we don't want you to be overwhelmed in terms of thinking that you have to do all of this today, but we do want you to be informed. And so as you're moving forward in your roles as managers, that you have this framework and these elements to help you to begin to make those decisions to move in a direction where your practices are enhanced so that your nonprofit survives. And that's across all of these topics, not just financial management. So I think there's some comments in the chat, and
I had a comment, Dr. Palmer.
Yeah.
So I'm in Durham, but I'm from Guilford County, and I just found this really interesting because you think of the YWCA and like the High Point and the Greensboro ones are so different. The High Point one is really focused more on community development and children and families, and the Greensboro one is focused. They're a shelter for families experiencing homelessness, and they're focusing more on parenting. So even like going in and thinking, I know what the YWCA is and like what I imagine their income stream to look like, they're just vastly different. And so even going in and being like, oh, these are part like sister organizations being so vastly different. I just want to point that out.
Yes, and all of the nonprofits represented in this cohort are all different. And whereas we might have similar missions, we might have a similar vision, but yet the way in which we address those and the way in which we pursue and try to maintain is very, very different based on the programs and or the services that we offer. Joy made a good analogy or metaphor, right? That this is like the personality, maybe of like looking at the personality or the culture, of your organization when we utilize, let's just say, the pie chart, since that's the tool I used to begin getting us kind of ready, set, go for delving into financial management as a fundamental of managing a nonprofit. Are there any more just kind of last comments about this image, about, kind of what this symbolizes or what it implies or anything like that?
Dr. Palmer, I think your point about like how each nonprofit has its own culture also speaks to the diversity of funders and how each kind of slice on that pie chart also has its own culture. So you have to speak a totally different fundraising language to corporate funders than you do to like your local family foundations, than to individual donors, because they all have their own interests and kind of culture that you have to kind of navigate through in order to get them sort of onboarded to the narrative that you're trying to make them a part of.
And guess what? It's not just one person that does that, right? It's the president, CEO, the ED. It's the board of directors. It's the executive committee of the board. It's staff that are leading these programs. It takes all of us really kind of pulling together to really kind of work on, how do we move to be a place where we really are pleased with what our portfolio looks like, and that we're meeting our needs from a financial standpoint. So, wow, financial management, Tracy, you ready? Because we're up next. So we're going to take about a bio break. I think, Rebecca, what, 5, 10, 7 minutes ish? Let's see, it is what time?
It is 10:27.
So let's report back at 10:35. Let's take a good little break, and then we're going to move right into financial management. Make sure also in your manual, we did ask you to refer to a set of financials. And we also asked you to, for those of you who are still like me, you like the hard copy in your hand, you could have printed that off before today. So that's what we're going to do when we come back. Thanks.
Great. Thank you all. We'll go on.
And we are going to get started on our first topic of the day. Well, continue with our first topic of the day, which is on financial management. And we're going to focus on 3 areas: financial transactions, internal controls, and an audit, or the audit, and diversification of revenue. So we're going to end with what we started with, and that is thinking about how do we diversify our revenue stream. There was a question or a comment in the chat about, I wonder how the organization did prior to. I think we were looking at a 2018 image, I think. All of that information is on their website. You can go there and you can retrieve that information. The example that we're going to use today is also on their website. So if you went to that link and you took a look at prior to the session at those documents, and or if you printed that off or any of that, you will notice that we are looking at a Big Brothers Big Sisters organization as kind of our example today. And so we're going to spend probably more of our time on the financial transactions, and we're going to talk about the guidelines in terms of thinking about how to maneuver in the financial management part of our responsibilities of managing a nonprofit, policies. We're going to look at duties and responsibilities, or talk about that. And then we're going to delve into this understanding the revenue and expenses side of managing our dollars, budgeting, reports and presentations. And we're going to look at 4 different reports, and that's the information that we're going to refer to in that link that you were provided in your manual. And we're going to talk a little bit about the 990 annual reports, the audit and auditor's report, and then what is known as GAAP, generally accepted accounting principles. So that's going to be our focus in terms of this segment of what it is that we're discussing. So if I could go back to the guidelines. So in terms of thinking about where do these guidelines come from? I would say begin with the bylaws. Often there is some commentation or instructions in the bylaws to the board of directors about managing the finances. In addition to that, quite a few nonprofit organizations have policies and procedures that are expected for the staff to follow as it relates to their individual nonprofit. And your nonprofit may or may not have that as of yet, but typically, those policies and those guidelines are established in that space. Also, the board of directors has an executive officer role, which is the board treasurer. And typically that person interfaces with the nonprofit on a regular basis, everything from signing checks potentially to working with the person on staff who has the duties of managing the finances, preparing financial reports for board meetings, et cetera. So the board of directors identifies who that treasurer is going to be in that regard. Also, some nonprofits have finance committees. And so those finance committee representatives from the board, and sometimes they may not necessarily be from the board. Some nonprofits will set up a finance committee and they'll have an external or some external persons that's a part of their finance committee, as well as internal. So it just depends on how your nonprofit structures that. And so the guidelines and the policies come from there. And then typically those guidelines and policies are written out so that everybody understands what they are, and they are shared with the board members, and they are also shared with the staff, and those staff that that need to know that information. Tracy, I don't know if you want to make a comment or not.
I'll just add that particularly when it comes to policies and things, even if you don't have some developed yet, you're probably following them. So take some time to go ahead and document them so that you've got that for a number of reasons, whether it's, staff transition or just to have things in writing. Remember, these policies and procedures and things around internal controls not only protect the organization, but they protect the staff that are doing those duties. So, if you have those checks and balances in place, then it just helps ensure that things will go right and the way that you want them to. And if you see something that has a potential, then create the procedure around it. So I'll give you an example for the center when it comes to our banking. I'm largely responsible for that, but Jean and I have conversations regularly about it. We have an email chain, but we went ahead and developed a form that I fill out that we both sign. And it's just another record of what's happening, just so we have that record. And again, offering protection for both the organization and the employees that are doing those duties.
So again, each nonprofit, has that protocol set up differently.
Mm-hmm.
And it just kind of depends on kind of what those instructions are. And then it also has a lot to do with the types of transactions that you engage in. Some nonprofits don't have many financial transactions, and some have quite a bit. And so just depending upon how that is, what it is that you need has a lot to do with what those protocols are. For example, some of your nonprofits might have government contracts, and you might have to, submit reimbursement reports so that you can, get dollars in the doors. So you're going to have protocols set up for that. Some of your nonprofits don't have a lot of donors, right? You don't receive a lot of cash donations from donors. So there's a process for that. So and then some, it may be that you have two people, signing off on checks, and then some you might have more. I mean, it just depends on how your nonprofit is set up. And so definitely defer to those guidelines. And if you don't have those guidelines spelled out, to Tracy's point about internal controls, it's important to have them spelled out so everybody understands and knows how that works. Another part of our conversation related to this is revenue and expenses. So when we're looking at financial transactions or trying to understand the essence of that, it's about monitoring and tracking revenues coming in and what our expenses are and dollars going out. And that is kind of I guess the twofold kind of way of thinking about what we're doing anyway when we talk about financial management. Budgeting then is a part of that. In your materials on page 103, we've provided a budget worksheet for you as a resource. And so basically what this shows us is it shows us where the revenues and the expenses are noted in terms of ABC nonprofit, let's just say. And so you have columns there that shows what the current organization's budget is, a year to date in terms of kind of where we are, if you're, using this as a report out sheet, what the previous year's budget was, and then what the previous year's actuals might be. And then, of course, you've got the revenue and expenses with specific line items under each. Line items may vary from nonprofit to nonprofit. So revenues for one nonprofit may not be the same for all. And that holds true for expenses. But what I will say is there are some common threads from nonprofit to nonprofit. For example, oftentimes contributions is a revenue in, line item. As far as expenses, if you have a staff and you're compensating them, then payroll, right, is an expense. And so there are some common threads from nonprofit to nonprofit, but it does vary. Tracy, I'm gonna pass to you and let you comment on just the budget in general.
Yeah, and I feel like we're going to keep repeating this over and over again, because as Dr. Palmer said, it is going to be different depending on the makeup of your organization. Just something to think about in terms of the budget on the preparation end that I think is so important is involve as many staff that you can. It shouldn't just be the executive director or the finance person developing this budget from year to year, because your other staff that are involved in running those programs are going to know better than me, for example, what kinds of revenues and expenses we need to make sure that we're accounting for when we develop a budget and when we track a budget. So I just can't reiterate that. And regardless of the size of your staff, bring folks in. We went through a process where we had our team, and it was pretty much everyone was looking at different parts of the budget that impacted them to help provide input so that we could develop one overall budget for the year and make sure that we were capturing everything.
And also, I'll just add to that then there's buy-in and ownership from the whole staff around what the budget goals are. And everyone understands that. We're all sort of on the same page. No one's going, wait a second, I thought we had this much money to spend on X, but we actually need it for this. So it helps to keep lines of communication open around that.
Yeah,
and we do want to, go ahead.
No, I was just going to agree with Rebecca, and it just reminded me that also be really transparent with your staff and board on a regular basis. For some that mean monthly, for some it may be quarterly. It just again depends on your organization, but we like to share at staff meetings updates on our budget, how we're hitting those revenue goals, because again, not only does it create transparency, but buy-in, and it holds the entire organization accountable.
Yes, that's a very good point, because a lot of times we like to give the responsibility of the finances to the person who is the right, Tracy, the chief financial officer, and it's really beyond that. It's quite inclusive, and so that is a very important practice to adopt, and to not be reserved in sharing when you have a financial challenge, because everybody can help overcome it and have something to contribute. So it really lays the foundation for that too, in good times and bad times, or challenging times, I should say, when we all need to kind of pull together and figure out ways to kind of get past maybe a bump in the road that we might experience as it relates to our finances. We want to share with you the sample budget for the NC Center. So I'm gonna have our team show that, and then Tracy, I'll just let you kind of share what we're looking at.
Sure.
Just give me 1 second to find that.
Okay. As we're queuing that up, also kind of get prepared with the statement of financial position, the statement of activities, the statement of cash flows, and the statement of functional expenses. We're going to be looking at that information by way of the link that we shared with you in the materials booklet that we have. So I would go ahead and however you're going to access that, if you're going to, have it pulled up on your screen, and we're going to show it on our end too, or if you actually have hard copies. One little tip I'll give you, if you actually printed it out, as we're going through these 4 different documents or statements, I tend to write notes on my individual copies. And so that is, that's something that you can also do as we go along. And go ahead and make that a little bit bigger. And then this is a sample budget that's filled in. So you have a worksheet. And so this is a sample budget that's filled in, and we just kind of want Tracy to kind of share with you what it is that you see here.
Yeah, so, and you may have mentioned this at the beginning, Dr. Palmer, talking about the budget, but again, the columns here I think are really important. What you're being able to share with your staff or your board by laying it out this way is where you are year to date. So how is the year going so far, which is what that first column is. They're projecting what the end of year is going to look like. And then the last column is what the budget actually was. So by doing this, you're really just kind of keeping your finger on how things are going. If you find that you're going to be short, for example, on a revenue line item, by trying to project to the end of the year, you can try to mitigate that as much as possible. Or you'll know that, maybe you have a shortfall in that area. So where do we need to make sure that we make up for that somewhere else in the budget, if possible? And then in this sample, they were actually using all of this information to help them draft their proposed budget for the next fiscal year. And that's really important. That's part of my budgeting process, is looking at the current year we're in and usually the year before that to see what some of the trends were. It helps you identify what things might be different from year to year. And then oftentimes there are some expenses and in some cases revenue that are standard from year to year. So looking at this information in this way helps inform you to budget for the future year. But it is so important, again, to just track how things are going. Don't just set your budget and wait till the end of the year. If you use an accounting system, I know many nonprofits use QuickBooks. You can actually enter your budget into QuickBooks by month, and you can create reports that show you where you are and where you expected to be at any point in time with just a few clicks of a button. So I recommend looking at that as well, if that's an option for your organization, because it can be a good line to sort of follow to see how things are going.
And Tracy, there was a question from Angelique. How would you show funds that are restricted by donor in your report? So you would separate out any that are restricted, you would separate out as a separate line?
Yeah, and there's a few ways that you can do this, and I'll be honest, the restricted funds are the thing that can get really complicated. The revenue recognition for nonprofits, can get complicated to track. But there's a couple of ways that we've done it. The other thing before I address that, I'll say is don't be afraid to be fluid and flexible in these reports. So as you have new board members, as you have new staff members, if somebody asks a question that says, hey, could we maybe see it this way? Try to provide that, because oftentimes it just shows it in a different light that may lift something up that wasn't obvious before. So some of the ways that you can do that is you can actually pull it out in the revenue so it's on a separate line item. We actually detail our corporate and foundation gifts by the funder so that we can see what we've budgeted, what's come in. And sometimes I do it by just a total at the bottom. And I say, out of all this money that's come in, this is the amount that's restricted so far, just so we have an idea of what's tied to a particular program or time period and what's really for general purposes. So there are different ways that you can pull it out. I would say whatever makes the most sense to you and the people who are reviewing it. Sometimes as finance staff, we live in it every day and it's crystal clear, but again, it can be confusing. So get feedback and ask questions and just try to show it in a way that makes sense. This is true too if you have a multi-year grant or a grant that was recorded in 1 year, but you can use it in the next. That can get kind of sticky. And so, you know, pulling that out and making it very clear and transparent, I always think is a good thing to do because you're identifying it. And I think there's less confusion that way.
Okay, all right, so that is budget in terms of looking at it as it relates to one of the tasks that we're responsible for in managing our finances. And as Tracy mentioned, this involves multiple internal stakeholders in terms of what this looks like in terms of numbers and how it really unfolds in the process of developing the budget. And so we're going to move into looking at some specific financial statements. And so we are looking at the financials of, let's see, Big Brothers Big Sisters of Massachusetts Bay. And when I was preparing this particular work session or workshop for us in the series, I went out and looked for an example of an organization whose information was out for the public to see, and that had all of the different components or pieces of financial information that we wanted to share. And then I also thought, well, let me choose a different state, right? Let me just choose an organization that we may have, we're distant from in essence. And so just like the YWCA example that I used, this particular organization has all of these financials available to you, I think for like 5, 6, 7 years of information. So you can really go back and look, you know, at each of these documents. And so we're going to start with the statement of financial position, which highlights for us our assets and our liabilities. And so what we see here is we see the current assets are noted, and notice that it's for for 2 years. So this would have been reported in 2019. And of course, you can see 2018 as a comparison there. You can also see from the budget line items, right? You'll see some common threads in the ways in which those assets are captured in terms of the names of those line items. And then of course, if we go, I'm going to come back to this page, but if you go to the second page, there's a page 2 to this, or part 2. And then you'll see the current liabilities and you'll see how those are highlighted. And then of course, what our net assets, remember we were talking about with donor restrictions and without donor restrictions. And then we do the math and we can see our total liabilities and our net assets. So I'm going to have us go back to that previous page. And then Tracy, if you could kind of go through and help us to see what it is that we're looking at, but could you also share the overarching purpose of this particular statement?
Yeah, so remember with the statement of financial position, also referred to as the balance sheet for the organization, this shows what you owe, what you own, and what you owe. So assets are what you own. So here, for example, this organization, you're going to see cash and cash equivalents. So that's going to be money that you have in your bank accounts. It might be broken down sometimes into the type of account, whether it's a certificate of deposit or an account such as that. So cash and cash equivalents, contributions receivable. So we know as nonprofits, if you're using the accrual basis for nonprofits, which is how this statement is prepared, that when you are awarded a grant or contribution, you record it when it is awarded, not when you receive it. And so if that's the case, then you could have contributions receivable at the end of your fiscal year, either from a grant that maybe came in or was awarded in June, and then you got it in your new fiscal year if you're a July to June fiscal year, or again, if you have multi-year grants, where you would record the entire grant when it was awarded, and then you would have receivables as those payments come in. It also lists out investments. So if you have interest earnings, things like that, prepaid expenses and other current assets. So prepaid expenses, I'll give you an example. If you have rent and your rent is due by the end of the preceding month, or if you pay health insurance for your employees, right? They normally book 1 month in advance. So you would be paying your July invoice in June. And so that would be a prepaid expense, because you want to make sure you record the expense in the year in which it is expense for. So that's an example of why you would put it in a prepaid expense during the year. And then if you own any property or equipment, and sometimes this is even defined by your organization. Some nonprofits have land or buildings. Some nonprofits, it's merely your furniture, computers, equipment. A lot of times the organization will designate a threshold for that, which makes sense for your organization. So if it's $1,000, anything under $1,000 wouldn't be included here, but anything over that would be. And oftentimes that has depreciation that goes along with it. So those are the types of assets that you would see on a statement of financial position. And we can scroll down unless Dr. Palmer, there's anything that you want to point out that maybe I missed. Scroll, she's saying scroll. Okay. So when you look at liabilities, again, these are things that you owe. So I know a relatively new standard issued is around lease obligations. So an auditor, for example, would come in and look at the length of your lease and figure out what liability you have related to that. Accounts payables are as you're wrapping up the year, so we're July to June year, in July, we get invoices for June expenses. So that's going to be what's going to go in accounts payable. You would still enter an invoice with a June date if it was for that month, but it just might not be paid until July. So that's what makes up your accounts payable. Accrued expenses can be things like liabilities that you're tracking that are not due yet. So one example of that is if you offer paid time off to your employees, and let's say when an employee leaves the organization, the policy is that you will pay that employee the balance of their annual leave. That would be an accrued expense that you would need to record and track here on your statement of financial position. Because that is something that is owed to the employee that you need to make sure that you're tracking and that you're aware of. Not all organizations have deferred revenue. An example of that is for our statewide conference, for example. If registration is open in June for our September conference, then any revenue that comes in the month of June would need to be deferred to the year that that event actually takes place. And so I don't mean to get too specific. We could talk about this all day long. I'm just trying to give some real life examples of what some of these liabilities are. So in this case, somebody has paid you for a service that hasn't happened yet. And that's why it's considered a liability. Long-term liabilities, this again lists the lease obligation. Maybe an example that is applicable to a lot of you as it is to the center. If you got a PPP loan this over the last couple of years, that is going to be a long-term liability on your balance sheet or your statement of financial position until that loan is forgiven, because it is something that you owe until they make a decision about forgiveness on that loan. And at that point, it would come off. So any kind of loans, credit cards, mortgages, things like that would show up under long-term liabilities. And then under net assets, you'll see without donor restrictions and with donor restrictions. This is a little bit different than what we talked about on the budget in terms of wanting to budget some of those funds for use in the year. This is where you're really tracking it. So every year you would add to your donor restriction line any new grants that have come in with restrictions. And then as those grants are spent, they would be released from restriction. So without donor restriction is more of like what we might refer to as general operating support, can be used for anything the day-to-day. With donor restrictions, again, might be for a particular event, program. It could be a time period. And so it's just a distinguishing between those two types on the statement of financial position. And then, as Dr. Palmer said, the net effect of your assets and liabilities are your net assets for the organization.
And so as we're kind of moving through, each of these, I see we probably have about 4 or 5 questions in the chat. I don't know, Tracy, I don't know if you can do 10-second answers or
Yeah,
not.
let's.
But we can go for it. Rebecca, if you want to just kind of, give a little insight, but we'll have to time it. So, yeah.
Sure thing. Van had asked, multi-year donor pledges are recorded the same way, correct?
Yeah, and sorry, I didn't see when that question popped in and what I was saying, but again, those would show up in your contributions or grants receivable. And depending on the period of time, that's another thing that could show up in donor restrictions. So let's say, for example, you get a 3-year grant. Even if it's for general operating support, it's restricted by time because you're going to have a set amount you use every year of those 3 years. So you would see a grants receivable, you would book the full amount of the grant. So let's say it's 100,000 each year for 3 years, you would book 300,000 in the year that it was recorded. And then your donor restrictions would show that 300,000 until that grant was expended. And so it would change year to year because your receivables are going to go down as you get those payments, and your donor restrictions for that particular grant are going to go down as you use those funds.
Mm-hmm. And then that follow-up from Van, which I think you may have answered inadvertently, would you record restricted funds from a previous fiscal year that will be used in the future in deferred revenue?
So it wouldn't go in deferred revenue. Again, it's going to show up in those 2 items that that I just mentioned, your grants receivable and your donor restricted assets. Deferred revenue is more like the example I gave about the event or membership, right? So when you guys join the center, you pay for a whole year of membership at one time, but you're not using that membership all at once. So we defer a portion of what you've paid us because we owe you that membership and those services for the year. So it's a little bit different than talking about grants.
Mm-hmm, mm-hmm.
If that helps answer.
That's helpful.
Short
so
answer.
2 more questions, triaging these. when you receive a donation, let's say Gloria says they got these computers, they tested them out, only half worked. But at that point, they had recorded the in-kind donation amount for all of the computers. How should they handle that?
Yeah, I think, and there's a couple of things here. Recording it as an in-kind donation is going to show up on your statement of activities or your profit and loss as revenue and expense. And obviously you want to recognize the person who donated those. On the statement of financial position, that may or may not come into play with your property and equipment, because again, it depends on the value, and it depends on the value determined by the organization. So obviously donated computers, while they are still very valuable to us as nonprofits, they don't carry the same value as if you bought something brand new. And so it might not even be an issue where you need to be tracking that on this statement and tracking depreciation, depending on what the value threshold is for you all. And that's something we work to determine with our staff and our auditors in terms of what seems appropriate.
Great.
I think, Rebecca, we have one more and then we're going to have to move on. Yep.
Sounds good. And this one we may discuss later, so just feel free to say if that we'll cover this later. But the concept of whether or not nonprofits project break-even budgets or budgets that include profits.
Yeah. Do you want me to talk about that now, Dr. Palmer, or are we going to touch on it later?
If you could do it real quick.
Yeah.
Yeah.
You don't. The answer is it depends. Sometimes you might have years where it's break even. Honestly, sometimes you might have years where you're going to show a profit. And sometimes you might have years where your board is going to approve a budget that has a gap, but you're going to do that with the idea that you have a plan to how you're going to fill that gap. So it depends.
Yeah. All right. So our next statement is statement of activities. And when you look at this particular document, I want to make sure. Yeah. So when you're looking at this particular document, we're showing, again, here we are with restricted versus unrestricted and highlighting that. I'm not going to take up time. Tracy, you go for it. We are at 1111 and we've got 3 more documents and the 990 and annual report. So if you could just kind of tell us the purpose of each, and then we'll get through the information and we'll come back for questions.
Yeah, so this is just outlining your revenues and expenses. You can see they match up, as Dr. Palmer said earlier, with a lot of the line items on your budget. You can distinguish between donor restrictions or without. And so I think, you know, that's really the gist of it, broken down by type of revenue. When you look at expenses, this is a report where you can break it down by your program area. So you can see program services, general and administrative, and fundraising and development. So it breaks it out on what those expenses are for. And then again, the bottom line just shows you the net effect of your revenue and expense for the year. And I'll just leave it at that, because we're going to talk a little bit more about functional expense on another statement and probably again on the 990.
Yep. And the functional expense, we can keep going in the document. And so here it is, Tracy, the functional expenses. I'm going to pass it on to you.
Sure. And this, a lot of nonprofits have to do this if you file a 990 anyways. So it's good practice to be able to keep up with this. All this statement is doing is taking all of your expenses. You can see the list over on the left-hand side: payroll, rent, membership, travel, those sorts of things, and breaking them out by your program services and your support services. So the program services are all the things that you provide to your community and your clients. The support services are the general and administrative, so the things that it just costs to operate your nonprofit. And then fundraising and development, so it's the time and money you spend on fundraising for your organization. So it's just breaking these expenses down in a slightly different way. Some of you may be familiar with those percentages that they come up with for support services versus program services. And we get a lot of questions about what is the right formula. And it depends on your organization. We encourage everyone to think about this fully and to, you know, it is what it is in terms of how much goes to program direct services and how much goes to running your organization.
What is the one, is there a common thread between all of these different statements of something that we see? Is it that first column? Is it what's listed in the first column that kind of is the common thread? Do you understand my question?
Not fully, sorry.
Okay, so I'm looking at, okay, so we're currently looking at the statement of financial expenses, and that first column lists the food, the beverages. Where might I see that first column in another statement? Would I see that in the cash flow? Would I see that in the statement of activities?
Yeah. So if we were, this on this functional expense where we're looking at expenses, if Leslie, if you scroll back up to the statement of activities, in this expense part right here where it says program services, general administrative fundraising, that's where you would see that show up in that statement. You wouldn't necessarily see it in the statement of financial position because that is, that's looking at your finances in a different way in terms of what you own and what you owe. So where you could see some of that is when you look at accounts payables or prepaid expenses, things like that. But it's not as much of a direct correlation as it is with the statement of activities.
Thank you.
And then Tracy, there's a restate of the question before. I think it's, no, not Gloria, sorry. Is it Stephen?
Stephen.
I think.
Yeah.
It's the zero-based budget versus not having a zero-based budget. I'll comment on that and then you can go ahead. Zero-based budgets don't really, I shouldn't say don't really, but zero-based budgets give you the perception sometimes that everything is going well. When in some cases when everything may not be going well. It does vary from funder to funder as to what they will accept. But oftentimes, if they even accept a zero-based budget, when let's say you submit your grant application, they may come back and ask you for more information about your current financial position, let's just say. Like they may ask you for your audited financials once you send that zero-based budget. And then when you send the audited financials, it's going to show, let's just say if you have a deficit, it's going to show that deficit where that zero-based budget may not necessarily, it may not be blatant in when you're sharing that zero-based budget, but it does vary from funder to funder. I can't really tell you what all funders prefer because I don't know what all funders prefer. But I think the caution with the zero-based budget is when you actually have a deficit and it's not necessarily communicating that. And then you send the audited financials and oh, voila, there's a deficit. So that would be what I would say there. Tracy, I don't know if you have.
I think that's it. And I think one thing that I know in our budget process that what happens is if you have a deficit, what do? You go back and you try to balance it. So you go back and cut expenses that you really need. And you really need more travel in there so you can go out and do the things that you need to do. And so you kind of handcuff yourself a little bit, but I understand wanting to be cautious about, sharing that with funders. Or you go in and you're like, yeah, we can probably make this much more in revenue. And so it's like Dr. Palmer said, like what's the real story there? And can you present it in a way and have a plan to help back up whatever that is.
And then there's one question there about fundraising hours.
Yeah, I was just reading that, and full disclosure, I'm not a CPA, and the center doesn't get federal grant funding, so that is not an area that I feel like I could probably comment on, but we can definitely keep your question and follow up with you afterwards, Gloria.
Okay. I think we have the cash flows. I think that is the last, that's the last statement that we're going to talk about. Let's see.
I think, did we
Tracy,
have a version of that
I
we
was going to
could
say,
share?
Tracy, did you need that on the screen, right?
Yeah, it might be
Okay.
helpful.
Yep.
While that's pulling up,
Mhm.
I'll go ahead and start talking about it. What I would say about the cash flow is that's laying out your cash and cash equivalents. It's looking at what's entering and leaving the organization. So what's your change in cash throughout the course of the year or the period that you're preparing it for? So how well do you generate cash to pay your debt and fund your operations? And so the one that we're showing that Leslie is pulling up for us is one that is what I would see in our audited statements. But we also prepare one internally. That's a spreadsheet where we're looking at what revenue came in for the month, what revenue went out to pay expenses, and what's the balance. And so we use that to look at what kind of runway do we have in terms of our operating cash and our balances to do what I just said, which is pay our debt and fund our operations. So it's just a way to track your cash coming in and out throughout the year.
Keep going up, Leslie, to the cash flow, or down, sorry. Here we go. Yeah. So
yeah.
just want you all to see, kind of see what you have. Sorry, Tracy.
No, that's okay. I would say on this, it's broken down by the type of activity, operating, investing, and financing. So again, this is what ours looks like in our audit report, but what I use for day to day is just an Excel spreadsheet where we're just going through the month, what's coming in and what's going out. So we can be tracking our bank balances and feeling confident that we can pay bills, pay debts that we owe, whatever it might be. So you're just watching your cash coming in and out from month to month.
So the next document that we're going to show is the 990. And of course, there's a correlation between the information that we have been reviewing all year, right? Through those statements, that information is transferred to the 990 form. This is our annual reporting to the IRS in terms of what has transpired over the year. And so what I'm going to do here is I'm going to, let me kind of poll the group so if we can go back to the gallery. How many of us have never heard of a 990, don't know what a 990 is, or this is your first time ever even knowing that this exists? And that way we know where to go with this particular part of our information sharing. I'm looking, team, to see if anyone is indicating that they don't know what this document is. So one of the things I would offer up, Chris is well versed. One thing I will offer up to you is, I know this might sound a little elementary, but to play the matching game. So you've got all of your statement, your financial statement, and then you have your 990. And when you look at your 990 and the different parts or different sections of it, it aligns with those documents and it aligns with that financial information. And so you're expected to file this every year, depending on how your nonprofit has set up its fiscal year with the IRS. Some of you are January to December, some of you are July to June, some are, I don't know, October to September. So it just depends on what your date of the year is for you to submit this document. And Tracy, I'll just let you, if there are any 2 or 3 things that you think that we need to know about the 990, then if you would kind of highlight that for us.
Yeah, the 990 is a really big document. The different schedules that you have to fill out depends on your organization and your activities throughout the year. There's a summary page at the beginning, which is really important. It kind of just summarizes everything through the year. That's this page that Leslie has up. There is a governance section that asks about a lot of policies that you have in place. So you may hear things about a conflict of interest or a whistleblower policy, or yeah, right there, Leslie, you had it. Sorry. So actually it's section B. If you scroll down just a little bit, it asks about some of those policies that it's not saying that you're required to have it, but it's good governance to have it. The other thing that's really important about the 990 is this is a chance to tell your organization's story. So when you, there's a schedule that's called Schedule O, and it's kind of if you don't have enough room, everything goes in Schedule O. But when you talk about your programs and services and the expenses and revenue related to those, you have a chance to write a narrative about what your nonprofit has accomplished throughout the year, sort of like you would do in an annual report. Use that opportunity to tell your story, share your accomplishments. These are public information, so they go on GuideStar. You can put them on your website, and it just gives potential funders and those in the community a look into your organization. So use this document to share about yourself. And related to GuideStar, go in there and look at your organization's profile, update as much information as you can, because that's where folks go when they, oftentimes when they want to learn about your organization and what you do.
Okay, so that's our 990. And then of course, the annual report. So if we could go to the Big Brothers Big Sisters page, I just want to show us where this information is. All of this is public information for this particular organization. And many of our nonprofits that have advanced to be able to produce and to have some consistency in the way that they're documenting their financial audited financial statements, and also their 990 information. Typically, it's public anyway, so they typically put it on the website, and the annual report is one of those. The Secretary of State's Office of North Carolina does expect us to complete the annual report form and or provide an annual report, and so it's important for you to kind of take a look at that. I don't see Dawn's complete question, but 990s are reviewed. Know that people will go out and, or entities, not people, but entities will go out and look at your 990s if they have an interest in your organization from A to Z. It could be a donor, it could be a funder, it could be a partner, it could be a colleague. This information is public, so people do take a look at it. And I often say to nonprofits, especially when they're being challenged and they are experiencing deficits, over a series of years, it's public information anyway. So, to not, be transparent about kind of what your financial position and condition is, you can do that, but the information is public. So in particular, if you've not filed your 990 or you've not filed some of that particular document, then obviously it's not public because you haven't filed it. But if you haven't filed it, then you're in jeopardy with the IRS, and so you really want to make sure that you do that. If you look at this particular organization, you see all of their annual reports for the last 5 years. You see all of their audited financials for the last 6 years here. You see access to their 990, looks like almost 10 years. So, this is information that is very helpful to entities that want to become stakeholders as it relates to your nonprofit or affiliated. And in particular, offer award grants and also donations. So that's important. The document that we've been reviewing with all of the information, with all of the statements, that document is the financials. That's one document. So where you see audited financials on the page, that's what we've been looking at. We've been looking at that particular document. I don't think we can get to all these questions in the chat. We've kind of run out of time as it relates to financial management. So if we could go back to the main classroom or the main room. I just want to take a look at everybody. Our apologies, but we probably won't get to all those questions. We've captured them in the chat. So maybe when we're debriefing team, maybe we can revisit that. So that concludes our financial, well, to some degree, it concludes our financial management topic. The very last thing that we highlight here, which is what we've already talked about, is the diversification of the revenue. And I take us back to that image that we started with, in terms of thinking about our revenues and expenses, in particular our revenues and where those dollars are coming from. So we fundraise, sometimes we offer fee for services, sometimes we get grants, sometimes we have contracts or investments, and sometimes we actually have endowments. And so that being the case, we are sometimes challenged with really making that diversification happen. Tracy, I'm going to give you the last words as it relates to financial management. Then we're going to take a break, and then we're going to come back and work on fundraising.
Yeah, just thank you all for being here today. There, you can see there's lots of questions. We could spend so much time on this section, and it's really hard not to go down the rabbit hole a little bit as you talk about one topic, and you can easily get into another. But just monitor your financials regularly, be transparent with board and staff, and prepare as best you can for some of those challenging times. Be flexible and fluid and creative as you can be, because making changes only lifts things up in a different way to be able to see it. So yeah.
You do have in your packet, page 105, these are generally accepted accounting principles for those individuals who are responsible for managing your finances. These are specific, to nonprofit organizations, but also in general. And so we've named a source there for you. And for those of you who don't spend a lot of time with who does the day-to-day managing of your finances, have lunch with that person or, have coffee with that person and talk to them and get insight from them on how this works or how this plays out with your individual nonprofits. Tracy, thank you. You're a rock star. We appreciate having you here today. I'm going to leave the group to make any just comments about this topic before we go into our break. Comments, thoughts? You can unmute yourself or you can put it in the chat.
While folks are thinking about what they want to share or add, I'll just say real quick that we'll include a link to our Facebook group page, which is a private group for your cohort. That some of these questions I think could be raised within that group and you all could weigh in. So we'll include that in the wraparound. And then if we find any, I'll look through the events calendar with Leslie and we'll see if there are any upcoming trainings on financial management specifically for nonprofits that we can share in the wraparound for you all to sign up for or listen into if it's an archived session. But just know that'll be coming your way.
So we're going to go into that break. The time is now 11:34. We're going to do a 5-minute, sorry. And we're going to come back, maybe 6. We're going to come back at 11:40. So let's go into that break, and then we're going to come back and work on fundraising. Long-term apparatus that you have set up that actually helps to bring dollars into your organization through donor giving. And so when we talk about fundraising, my perspective, we're not talking about grant writing. We're not talking about contracts for privatized services. We're talking about outright asking individuals to give cash donations. And so that's the space that we are presenting this information in. And that is, how do we raise money? One of the things that we also embrace as fundraising professionals is the idea that we want the majority of the resources that we receive, if at all possible. We want the majority of those dollars to be donor gifts, and in some cases, donor gifts that are unrestricted, so that we can manage those expenses the way in which we need to, based on our unique situations with each nonprofit. So, when people kind of talk to me or ask me questions about, well, how do I meet my annual goal for my annual fundraising goal every year? I say it's consistent, engaging in consistent practices and strategies over the long haul. It doesn't happen in 1 year, it doesn't happen in 2, it happens over really the lifetime of that organization to consistently engage. Now, what hampers that is when we have staff changes, we have leadership changes, we have changes in what's happening outside, like a pandemic outside of our organizations, and we have to adjust. But I routinely say you still keep with those strategies, and you still continue to implement and work within those principles that you've adopted that have yielded you and your nonprofit dollars in the door. There's no magic to it. There's no formula that I can necessarily give you to say, oh, if you do these things the same way for everyone, for all nonprofits, you're going to experience the donor gifts you're going to receive the donor gifts that not only that you desire, but that you need to meet your budget. So I always start off with that, because sometimes we think there's some magic to it. It only becomes magical when we figure out what our strategy is that works for us, and it yields those dollars that we need each and every year. And so that's what I will say at the onset of this. We're going to talk about 4 stages of fundraising, and you have some other pieces of information in your materials, like what is fundraising, what is it not. You have some preliminary information, pitfalls to fundraising. You do have that at your disposal in your materials, but we're going to go right into the stages of fundraising. And when we talk about stages, we're not necessarily talking about stages. Yes, we're talking about it in terms of, let's say, a campaign, but we're also talking about it in terms of building the capacity of your nonprofit to fundraise. If we don't have a donor base, then it's going to be very difficult for us to fundraise. If we haven't done any prospecting and we haven't identified folks that we can contact and communicate with to acquire donations from, then fundraising just isn't going to work for us. So we start with this idea of developing a donor base and identifying, prospects and or trying to renew those donors that have already given to our nonprofit organizations. So in terms of thinking about the identification, cultivation, solicitation, and stewardship, those are our 4 stages. Those handouts are on page 110 and 111. So if you're referring to that information in your packet, stewardship is shown on a later page in your packet, which is, let me tell you where that is. It is, let me get over there, on page 119. And so you'll see, you know, that that's kind of where that's laid out. Whereas with financial management, we did more of a presentation versus hands-on work. Now we're getting ready to do some hands-on work as it relates to the identification of potential donors. And so we're going to walk through kind of how we do donor prospecting. And so in your packet, you have a prospect and identification worksheet that's on page 112. So if you go to that page, we're going to jump right in to identifying prospects and working through this process. So you have this in your packet. So for each one of us, what we want you to do is we want you to identify for your nonprofit, we want you to identify people that you know in general. Just identify 15 people that you know. And you can use first names, just kind of jot their names in there. Just 15 people that you know. 15 people that you know. I'm going to go silent for just a minute. So this is anybody, family member, friend, colleague, anybody that you would consider someone that you know. And so you're going to generate 15 names. We're going to go in breakouts and do some work with this. So know that that's coming soon. Once you've generated that list of 15 names, I want you to put a check mark by the names of the individuals that you've listed who believe in the mission and the vision of your nonprofit. So you may have 15 names, but you may have 5 out of the 15 that actually believe in what the mission and vision is of your nonprofit. Or it may be the opposite. You may have 15 names and all of them believe in the mission and vision of your nonprofit. The identification stage of fundraising. And what we're talking about is identifying donors. And we're starting with prospecting. Once you've identified of those 15 who believe in the cause or believe in your mission or vision, we want you to indicate which of these 15 give money away. Which of these 15 give money away? So you're identifying 15 people, you are checking off which of them believe in your mission and vision, and then you're indicating out of the 15, which of those 15 actually give money away that you know of. Out of the individuals that give away money, which of them believe in your mission and vision? Now, that's a little layered, but which of them believe in your mission and vision? We've identified 15 people that we know. We've checked off which of them believe in our mission and vision. We've checked off of the 15, how many of them give away money for any particular reason or cause, and then how many of those believe in your mission and or your vision. So now what we have a dual list here under gives away money. Of those 15, you have those who give away money in general, and you have those who believe in your mission and your vision. So those are two different sets of prospects, right? People who give away money but may not believe in your cause, and people who give away money who do believe in your mission and your vision. Bless you, Rebecca. I saw that. So you have kind of a dual list there. And then this next column is, of those individuals in that third column, how much would you ask them for in terms of giving to your nonprofit? What is an amount that you believe would be appropriate to ask of them? Okay, if we could go back to the main classroom. So now you have a potential prospect list. You have prospects who give away money, as I mentioned, and you have in general, and you also have a list of folks who give away money and they believe in your mission and your cause. I'm going to have us focus for today on the group that believe in your mission and your vision, and they also give money away. That's the group of individuals that we're going to focus on. When you go in your breakout, identify a person who's going to fill in page 113. Because now what we're going to do is we're going to develop a master prospect list. So we're identifying prospects, and notice what we're going to do is we're going to grow this list, and we've narrowed it down to the individuals who believe in our cause, our mission and our vision, and they give away money, and you've indicated an amount of money that would be an appropriate ask, your perspective, that would be an appropriate ask of those individuals. So you started off with 15. If you ended up with 15, that's great, right? But you started off with 15, but you might have ended up with 5, or you may have ended up with 10, or you may have ended up with 1, or you may have ended up with none. So when you go into your breakout, again, you're taking with you those individuals that you've identified that give away money and they believe in your cause, and you've noted an appropriate amount that you would ask those individuals for. On page 113, you're going to identify a person that's going to be your record keeper, and of course we're in a training, so you're going to, kind of work with this worksheet just to make sure you're indicating information so you can report back to us. So when you go into your breakout, take some notes real quick. When you go into your breakout, you are going to share in your breakout all of those individuals who give away money and believe in your mission and cause, and the amount that you deem would be appropriate. Now, your prospect list might be more than 15, depending upon how many prospects are shared in your group. And then what we're going to do is you're going to identify in that breakout, you're just going to make notes for give to the person who's recording, and you're going to make notes of who we need to contact to help us to meet and greet that person in that prospect list. And we're going to also identify who amongst us, right, is going to go and solicit and actually ask for that gift. Now, let me go back to that second column, that contact. Sometimes when we identify a prospect, I may identify the prospect and share that prospect with you, but it may require another contact or another person that we know in order for us to really get to a point where we can actually see and ask or interact with that person to solicit the gift. So that's what we mean by the contact. it may not be necessary. It may be no one. It may be that I present the prospect and I can solicit the gift from that person as well. But that's what that contact is all about there. Then we're going to agree on the amount that we're going to ask for. And if there's any additional information we need to know about that prospect, we're going to note it. So I'm going to just repeat real quick. We're going to go in our breakouts. We're going to generate one prospect list. We're all going to share in who we would add or include in the list. We're going to identify if there's a middle person that needs to be a part of asking this person for a gift. So we're going to include that contact. We're going to decide in our group who's going to solicit that gift. And then we're going to indicate the amount and any other additional information. So we are real close to the top of our hour. So we're going to go into breakouts. We're going to have to work a little quickly. And we'll come back, Rebecca, at say 12:05.
Okay.
And then we'll go from there.
Okay. Sounds good.
Okay.
All right. I've had to shift one or two of you just to make sure we have enough people in our breakout rooms and they're a little even. So just note that. But most of you are in your same rooms with the same folks you've been with for this session. So we'll see you back here soon.
Well, welcome back to the main room. I do want to hear back in terms of, I really want to know how many prospects did you come up with? And you can put that number in the chat. How many prospects did your group come up with? I'm going to try to keep up here so it was 6 groups, right, Rebecca, 6 breakouts?
Yes.
And so
yep.
Put in the chat for me, how many prospects then did you generate that we could, okay, we got a 0, okay. How many prospects? 15 plus, okay. Let's see that. How many prospects did you generate? And now this is a task, or at least 10. This is a task that you can do with your board. And you can also do this with your staff. You can also do this with your volunteers. And hopefully by interacting in your breakouts, maybe you had some takeaways around how to do prospecting. We got sidetracked, we came up with 0, okay. That happens in real life, you know, when we work with boards to do prospecting, we sometimes get sidetracked. So that's a real thing. We didn't get to the list. So based on what I can see, maybe 25 plus is kind of what we were able to do collectively. So let me tell you what I would do if this happened in real life, right? Like if I brought you all together for ABC Nonprofit and we had a session on prospecting, I would take a pause and I would let you go back to your groups and I would let you work out that prospect list. Because if we don't have prospects, we don't have anybody ask for donations. And so this is not, it's not an uncommon thing for this to happen. Let's just say you ask your board to do this and you leave the room and come back and you kind of sort of don't have prospects. So again, if we were at ABC Nonprofit and we were one big board of what, 30, almost 40 people, and we went off and did this, I would take a pause and I would send us back to our breakouts and we would generate that list and then we'd come back and use it, right? And so this idea of, or this concept of prospecting in this way, and you could change, you know, how you determine who to make contact with and who not, but this is kind of a general practice of how it's done. And what do? We generate that list, we make the ask, we get the yeses, the nos, the maybes, you know, we decide how we're going to follow up with them until we actually accomplish our goal in terms of whatever that campaign is if it's an annual campaign or if it's a capital campaign, regardless of what the purpose is for raising those dollars, if we're trying to get cash in the door, we have to ask people. If we don't ask, then the chances of generating cash donations dwindles. So that's important as an important takeaway. So we're gonna stop today at cultivation, right? So we've talked about identification. Now that we have this list of 25 plus, we now have to cultivate that list. So if we could go to the PowerPoint slide, team. We have to move from prospects to new donors. So we've talked about identification, and that is a process in and of itself, and it takes time. But when we get to cultivation, if we could go to slide 22. When we get to cultivation, we're wanting to move those prospects to becoming new donors. And the way to do that is we ask. In your material, you have, it kind of puts it pretty simply. Stay on the PowerPoint slide, team. I don't want you to move. I just want to tell the group where this information is. If you look at page 117, prospecting is key. And so we keep at it until we generate the list. We keep at it until we generate the list. Page 117, you only get money if you ask for it. And to ask for it, we have to generate the list of prospects. So we move from prospects to actually turning these prospects into donors. And then let's not forget the existing donors that we have. Let's not forget the existing donors that we have. Once we have our prospects and we've determined how we're going to solicit, and we begin to do that, we also make sure that we are retaining those existing donors. And we do that by putting that information in a donor base or establishing a donor base, which then we incorporate that information in a database. It can be as practical as an Excel spreadsheet or Excel workbook, where you are maintaining and keeping information about prospects and donors, and you're cultivating. Because what we ultimately want to do is we want those prospects to give at least once, and then we want to return to them in unique and different ways to have them to repeat the gift or repeat giving. And so when we have that donor base, meaning people who have already given, which would have been the prospects now turned donors, and also the existing donors. Or if you're brand new, then you're starting with prospects and you're just trying to establish those new donors or donors for the first time. What we do then is we keep up with how they give, when they give, and why they give. And we analyze that on an ongoing basis. Fundraising is not once a year. Fundraising is every day. And so we should be doing work towards fundraising each and every day, just like we implement our programs each and every day. Our board can be involved in that. Our staff can be involved in that. We can have volunteers that specifically help us with that. And so we're analyzing that giving, and we're making sure that we are cultivating and growing that donor base. And so we're communicating with our donors on a regular basis. If you look at handouts on page 114, 115, and 116, we've got some supporting information there for us. And I want you to take a look at this in between between now and next week. So we've got a donor bill of rights. We've got some people rules of fundraising. And then we have a sheet here that really kind of highlights the donor base. When we return next week, we're going to look at some examples of data systems, database systems that help us to manage donors and really help us to engage in this whole stage of cultivating our prospects and further enhancing the giving of our existing donors. So we've got people rules of fundraising. We've got the donor bill of rights, meaning people who give to our organizations, what should they expect in terms of how we interact with them? And then, of course, like I said, we have the donor base, and we're going to talk about some examples of donor systems. And some of you may use systems like eTapestry or Salesforce, or again, some of us may use Excel and use that to help us to kind of manage our information about our donors. If we could go back to the main gallery or the main room, and if we could take a look at the chat to see kind of what I saw, some comments kind of coming up as I was describing. So we identification, cultivation, and what we have left is for us to solicit for donations and then stewardship. So we will pick up there when we get together next week. And so we're not finished with fundraising. We will continue. What do we have in the chat, Rebecca?
We have some feedback just on sort of methods that folks recommended that have worked for them in terms of prospecting and soliciting donations. And then segmentations, this is interesting that Amanda noted: attain, retain, sustain, regain.
Mm-hmm.
And those are the segmentations that they use in their donor database.
Mm-hmm.
And developed more management strategies as touch points for each segmentation. That's great.
So once we have the donors, right, once we've established the donor base, then we segment those. And we identify how we want to work with those donors. You know, so we may have folks who have given the one-time gift, right, the first, and then we have those who it's a habit, right, and they give all the time, or on a, I shouldn't say all the time, but on a regular basis. And then we have what we call the thoughtful, right? They give beyond, let's just say, the annual giving. They give the campaigns, and you know, they might even leave us a gift in their will, and you know, those kinds of things. And so we have that impulse gift the first time, the habitual and the thoughtful. And so that's something for us to think about as we think about returning back next week and starting with the solicitation and what does that look like. I'm going to pause there and just get some general feedback. You know, this is what I do routinely as we're going through our learning. Give me a temperature gauge on where we are coming into the close of our session for the week as it relates to financial management and the part of fundraising that we've covered so far.
Nicole said that she welcomed this space to think through and refresh current practices and learn about new ones to drive efforts forward. And she also mentioned that her group organization has scripted talking points, especially for board members who may not be as comfortable with making the ask.
Mm-hmm.
And that's an example of something that if you were willing to share some of those ideas for talking points or sample talking points, that Facebook, I'm going to keep bringing it up to see if we can get folks to join that. That's a great place to share those resources and to, and rather than having folks having to reinvent the wheel, if you're willing to share work that you put in, it kind of lifts all boats in that metaphor. So let's all rise one another's tides together in that Facebook group as we can, if you're willing to join that, if you're even on Facebook. I know some folks don't stray away from those social media platforms. But if you're on there, feel free to join, and I'll include that link in the wraparound again.
And also keeping in mind, we're looking at fundraising in terms of identification, cultivation, solicitation, and stewardship, right? That's how we have this part of our institute framed. And I think the biggest takeaway is that we all have to customize the way in which we implement work in these stages. We have to customize that to our specific nonprofit. And I know we've said that all day today, that, it's unique to your nonprofit. It's, this is a framework for us to use, but in order for it to work for us, we actually have to put into practice these strategies. And might I say techniques in terms of how we actually get to our end goal, which if we're talking about fundraising, we want to raise money. That's what we want to do. And most of our nonprofits have a goal of how much cash we need to raise each and every year. And so we customize the way in which we do fundraising in terms of the specific strategy or the specific, let's say, an annual campaign, for example. We have to customize that to each of our nonprofits. And some of your nonprofits have been at this for a while, and you see the results of that. It does take time. Don't get frustrated. Don't get overwhelmed. It's a matter of, again, being consistent and really establishing that internal apparatus to help you to do the work that's necessary in all 4 stages. So that said, I'm going to turn it over to Rebecca, unless we have any folks that want to chime in and give some feedback. We have about, I don't know, a couple of minutes to hear someone else's voice other than my voice.
I brought up the question in our, I was in group 5 in our chat, and all the ladies in that group were a wealth of information. So my question, I've always been curious about, stewardship and maintaining my donors and how to show them appreciation. What's the best way? Do I send text messages, little updates, a specific email? Sorry, I have a dog over here that's wanting my attention. She is done. So what, and even thinking about year-end giving letters, when we're mailing those out or emailing, what's the best way to show appreciation for our donors, the ones who give large amounts, the ones who give small amounts, and what's the best way to continue that? Is it meeting in person, or what are your thoughts on that?
We have to ask our donors.
Okay.
We have to ask them what works best for them.
Oh,
if your organization has that kind of giving relationship with the donor, then we ask them, what is the best way to communicate with you? How would you like for us to follow up with you? That's a part of that information that you include in your database about that donor. So if I'm one of your donors, then you inquire with me about what works best. Now, I know with organizations that I have worked on the fundraising side with, both in helping raise money as a layperson, and also in terms of from a consulting perspective, donors will tell you. They will tell you what they prefer. And so we kind of keep that information so that whoever's doing the communicating, they know exactly how to interact with. Like I've worked with the organization recently. We have a donor who doesn't want anything through email. Don't send any, no solicitation, no, don't ask me through email for my gift. So guess what we do? We have a board member call that person. And so, donors will let you know, they understand. They know that there's a master plan. right? As to how you're bringing dollars into your organization. And so that's that donor relations part of the work, that we establish that relationship so we can inquire with them about what works best for them. But someone else can chime in too. My experience has been donors will let you know. If you ask, they will let you know what they prefer.
So if somebody sent a check and you've never met them, when do you ask that? How do you ask that question?
If they send a check, let's see if they have a mailing address on that check.
Okay.
You may not
All
have
right.
a phone number. You may not have
Right.
an email. So maybe you write them back. Hi, thank you for your gift. How
Right.
should I communicate with you? Here is my email. Here is my phone number.
Okay. That's,
It's-
I never
it
thought
is-
to do that on my thank yous. I
Mhm.
never thought to do that. Okay. That's huge.
Kathy, it is tedious, but it is tedious.
I handwrite all my thank yous. So,
Yeah,
I mean,
yeah.
we're small enough that I handwrite all my thank yous at this
Mhm.
point, but that is a great piece of information. I never thought to do that. Thank you.
And then we have to think generationally, right? You know,
Yep.
we have
Yep.
some folks, they don't do any kind of electronic communication.
Right.
Snail mail is it, or a phone call,
Right.
or a visit, you know? So
Yep.
I think, you know, it's tedious. That I'll leave it at that. It's
Okay.
tedious. Getting
That's
to know
okay.
our donor base is it's tedious work, and it's delicate work as well.
Okay. Perfect. Thank you.
Rebecca, I'm going to turn it over to you because we have 5 minutes.
Yeah, 5 minutes left. We'll try to end right on time. Great feedback in the chat. Thank you all for your participation today. Such a jam-packed session like they all are. I'm sure the time just flies by. Thanks for hanging in there with us. We have one session remaining. Leslie, will you go ahead and share our last 2 slides? Wanted to give you all some quick graduation prep notes. These will be included in the wraparound, but just know that we have an invitation for you all to participate in recording a very short video using this platform called Montage. And what it will do is we'll be sending you an invite. If not today, then first thing tomorrow. And it will invite you to go on this platform and record a video based on some prompts that we've preloaded. Those videos, I mean, we're talking less, like 30 seconds or less. If you can sum up one response to any of the prompts that are given would be awesome. We will then accept those until the end of this week. And then Monday will be our day where we compile them into one graduation video that we can show on our final session to sort of celebrate all the accomplishments that you all have made through these 6 sessions, well, 5 as of this week that you'll be referring to in your feedback in that recorded video. Just be mindful of lighting, sound, make sure you don't have a lot of background sound so that the quality is really good. You can do it on your phone. Record it from your phone, but just sort of think about video quality and sound as you're doing that. And that's all optional, so don't stress. If it's something you can't get to, please don't worry about it. As many as we can get in and include is great, but don't feel stressed about it. The next thing is graduation themed Zoom backgrounds. So we'll send those, a link to those that you can download to sort of celebrate our graduation. We take a break in between our content and before we come back for graduation, and that's a time when you can go ahead and we'll send you instructions for how to upload a background to Zoom if you're not familiar with that. But it's just a fun way for us all to celebrate making it through the course and to sort of liven up the gallery view for all of us celebrating graduation. You all have confirmed mailing addresses when we sent the workbooks at the beginning of session, so we probably don't need you to do that unless your address has changed or you want to send an updated mailing address. You can always send that to us and we'll update our records, but that's for us to send out certificates from the center as well as your class photos. We will take a class photo during graduation with everyone's Zoom backgrounds and party hats on and all that. And then we will be including information in the final session about the Duke Nonprofit Management Certificate. We'll give you the paperwork that you need to submit for those credits. And you all can feel free to review that and decide if that's something that you're going to work towards or not. But those are graduation items. Leslie, if you'll go to the next slide for us. She'll work our way down there. I'm going to go ahead and pop the 2 links in the chat. The one is for the survey for today's session. And thanks as always for all of your feedback for each session. That's a great way to give us your feedback, is to click on that and go ahead and take that survey. And then one more thing I want to mention to you, Leslie's going to share our final slide here. I did want to mention that real quick, a quick plug for our conference coming up on November 3rd through 5th. It's virtual, it's half days, but we have some great speakers, some great keynotes. Wanted to give you the link so you could check that out and consider registering for that. We'd be delighted to have you guys continue this whole learning journey through with us at the end of the year with conference. Oh, it looks like it's not showing up for some reason, but is it showing up for you, Leslie? That's so strange.
No, I've been having some difficulty today. So
Okay.
it just disappear on me.
Oh, no worries. Let me go here. I'll show you this final slide, and then we'll be on our merry way. Can I do it quickly? Okay, here we go. Yeah, so our theme is, hopefully y'all can see this. Our theme is belonging, talking about all the ways that belonging help us personally and professionally, really. And so I've included the link for our conference center page in the chat. If you're interested in learning more, reviewing keynotes and individual sessions, you can click on that, as well as registering for conference coming up. But hopefully, that helps you all get what you need, and look out for that wraparound and our graduation notes included in that, as well as an invitation to submit your video for montage. And we'll see you next Tuesday for our final session. We'll be talking about human resources. We'll wrap up our fundraising. We'll get into human resources, and then we'll have our graduation. So with that, please, everyone, take care, and we will see you next week. Bye.
Thank you.